Mic off. Mic off. Mic on.
All right, good. Good evening, everyone, and welcome to this week's market analysis. Let's let's talk about how the week has been over the past few weeks, about 4 weeks now. I've been given the market analysis consistently every Sunday, and so far it's all been spot on. All right, and this is going to be another market analysis for you guys. And the goal for all of these market analysis is for you to be able to understand how I think when I see the markets, so that on your own, without me looking over your shoulder, you can also be able to have confidence and analyze the markets for yourself. That is the goal here. The goal is not to give you fish, the goal is to teach you how to fish so that you can do it by yourself. So let's talk about what the market has been doing. Let's talk about what the market has been doing recently. All right. So the market generally for Euro USD and GBP USD is been hanging in some sort of consolidation. So if you look at uh, the market generally, the market has two faces. All right, and I spoke about it recently. The market has two faces. The market is either in an expansion or it's in a consolidation. So when the market is in an expansion, you're going to see the market moving very quickly, and you're going to see the market moving at a very fast rate, and that is usually very good. Let me add a little bit of background music. I like to have some background music whenever I'm uh, doing this. Give me a second. Okay, no, let's go without it today. Let's go without it today. All right. So you usually want to see the market like moving, and I said the whenever you have a trending market, the trend is always your friend. Especially as a new trader, the trend is always your friend. You want to see the market moving and moving quickly. All right. So you look at a market like this right from here, the market is just moving down, and you can see how it's just cascading. It goes up, it retraces slightly, but it drops down, retraces slightly, it drops down. Over here we have a very clear downtrend that is taking place. Now the some of the worst times for most traders is whenever the market is not trending, or the market is consolidating, or the market is not making very big moves. For any trader, that's not the most ideal condition to trade in. Okay, now since the beginning of this year, all right, if you look at January, from January, the market has been in this sort of tight consolidation. The market has been in this sort of tight consolidation. And if you watch last week's review, I told you that I was looking, or my analysis was for market to break out of that consolidation. And I love what the market did last week. Not only did it just break out, it broke out and closed above the market. So ideally, I have just drawn this box here. This box does not really mean anything. I'm just boxing in the price. So if you look, price has generally been boxed since the entirety of this year. Price has literally been boxed within this area that I have boxed out here. All right, that's literally been the movement of price. Price has kept itself within that spot every single time. Right now, I was looking for price to take out to break out of the zone here, but not just break out of that zone, but it's also close above this buy side liquidity. Now I love how price has closed above the buy side and is holding that side. What does that mean for us? It means that price is very bullish. Price is extremely bullish. Now this consolidation that has been happening for the past few months has been crazy. Let me show you it on the monthly chart. So on the monthly chart, this is literally the tight spots that price has been in. This right here, that's what price has been doing the entirety of this year. In fact, even to some points of last year, because this is from February 2023. So you see that Euro USD since February 2023 has been very, very, like, it's been in a consolidation. It's neither bullish or bearish. So we've had to be very nimble whenever we are trading. Why? Because you want to make sure that whatever you are trading is you are trading a very tight consolidation. So you want to ensure that your TPs are accurate. Your take profit is accurate. You're not trying to hold for too long. You're just taking what the market gives you. And that's why I'm excited about what just happened, because if you look at this now, mind you, this is the monthly candle. So the monthly candle does not indicate that price has made a decision yet, all right? Because the month has to end for us to confirm that the monthly candle is actually what we want it to be, right? But if this monthly candle closes bullish, that's going to be amazing. Look at the weekly candle. The weekly candle is what we can look at and use to do analysis, because the week has ended. So when you look at the weekly candle, you can see that last week price closed above this weekly buy side liquidity. What that means for me is that price is looking to be very bullish. And I explained a certain theory last week where I explained to you how when price is extremely bullish, and even on a Friday, it has not come back down. It tells you that price wants to keep going up. So in this particular situation, sorry about that, I got a message. That's what distracted me a little. But you can see here that from the way price closed last week, price wants to keep going up. So what am I looking for? I'm looking to see price just keep going up. But remember, price does not always just go up. So we might have a slight push down, and then we can have that push back up there. Now, there are two things that could happen. Regardless of the two, price is pushing up. So I have no analysis beyond the fact that price is pushing up. Given the fact that we've had an extremely bullish last week, I still expect price to go for the buy side. So what I'm looking for here is that price is gonna come and take this out. There are two things to note though. Because this month is about to end, this is the last week of the month. So one of the things that we are likely to see is price maybe go down slightly for this week, or not really have a lot of movement this week. Why? Just because the month is about to end. That's just the reason. Let me look at the news events that we have for this week to look at how I think price is going to flow. All right. Okay. We have some interesting news events. We have GDP coming up on Thursday. That's going to be very important. But like I was saying, we have price where we want price, which is very good, because now price has closed above this. Let me tell you something I wouldn't have loved to see at all. For price to have come up all the way here during last week and closed below this line, but they didn't do that. So now I'm happy. I'm going to draw a fair value gap over here that I can spot, and I'll keep my eye here if price should enter a deep reversal during this week, right? I don't expect that to happen, but if price ends up doing that, this is a weekly fair value gap. If price ends up doing that, I'll be keeping my eye on this zone as a zone for price to potentially come back, do this, and come back here. But like I said, I don't expect price to do that for this coming week because of how bullish price is. It could happen, but I don't expect it. What is my bias for this week? I'm extremely bullish. I'm extremely bullish. I'm taking only buys. I am not interested in taking any sells. Right? But what is my analysis here? My analysis here is just telling you what is the possibility that could happen on the market. But personally, I'm not interested in taking any sells. All right, now stick with me to the end, because in the end I'll tell you how exactly I plan on entering the market. Right, so I don't plan on taking any sales this coming week. All I'm looking for are buys to what level? Buys to the level where my eye is. All right, that's the level I'm looking at. I'm looking at taking buys all the way to that level, because that's my weekly level. Let's look at what price is on the daily chart. When price is so clear like this, sometimes you don't even need to look at the daily chart, all right, because it's so abundantly clear what price wants to do. So over here, what I would like to draw is, I'll just draw my fair value gaps. Let me delete. I'm come to delete something. I just want to see what I'm deleting. I'm just deleting the zone over here. All right, the zone that shows the box, just so it doesn't confuse me when I'm actually trading. All right, so I'm gonna push this fair value gap up here because I no longer need it down there, and I'm gonna draw my fair value gap here. That's my first fair value gap, and I have another fair value gap resting just below that one. Likely to see price come in there, and give me a second. Likely to see price come in there, come into the fair value gap and push up. But like I said, I will not be trading in a contrarian fashion. All right, I'll not be trading to the downside. I'm only looking to see price move to the upside. That's my expectation for the entire week. All right, so this is my upside that I'm looking at. I'll just draw a few things. Excuse me, sorry. I'll just draw a few things that I'll be expecting to see in price as well. So we have this fair value gap over here, but if you can see the price mark, you can see that price has already crossed above that particular fair value gap. Price has already crossed above. Price has already crossed above that particular fair value gap. So, but I'll just draw it here because price could also use that. But as you can see, price is extremely bullish, and I've taught you guys something. There's one concept I've taught you guys over and over again, is that price moves from liquidity to liquidity, and it rebalances at fair value gaps. So that's why I'm drawing these fair value gaps, because if price is going to rebalance, if price decides to go down, all right, go down like this, all I'll be expecting is for it to have a bounce and keep going back up. All right, because I'm still bullish. So then if that's the case, then why do I keep the favor? Why do I trade bullish? Because I'm not a contrarian, guys. I'm not a contrarian. I'm not trading against the trend. Right, so I'm sticking to the trend. This is going to be one of my shortest analysis, because price is so clean right now. It's so clean right now. Let's go to GBP USD. Let's start from the weekly chart. On the weekly chart, you can see how, once again, price is bullish. There's one thing that I've noticed that I love. One of the things I love is when I see GBP USD and Euro USD doing the exact same thing at the exact same time. Guys, that's golden. That's golden for you. Like, I love it when I see the two, because especially when price is in a consolidation, there are weeks that you see that GBP USD is doing one thing and Euro USD is doing something else. Those are not the best conditions for my trading personally. But when I see something like this, where the price has aligned, the market has aligned, that is just beautiful. All right, so I'm going to delete this fair value gap because this is no longer needed. I'm going to push my sell side liquidity to the top here, because this is now my new sell side, and I'm going to adjust this fair value gap right over here. This is just for the weekly, so this is the fair value gap I'm looking between this candle, the high of this candle, and the low of that candle. That's my fair value gap. All right, let me just make sure I got that clear. So let me just increase it a little. All right, so that's the fair value gap I'm going to be looking at. But I'm saying, like I said, I'm still looking for price to be bullish. If you look at this particular chart, price has already crossed this fair value, this buy side liquidity, has already taken it out and confirmed that. So where's the next buy side I'm looking at on the weekly? I've got this buy side liquidity resting over here, which is good because now price is going to take out liquidity on the opposite ends. All right, so that's my weekly buy side liquidity. Price could, I'm still going to leave these levels here because price could actually come and touch some of these levels and then begin to push up. Those are what we call our A plus setups. Now right above this, I have what we call a liquidity void, all right, or a liquidity gap. And I like it when I see things like this because a liquidity gap acts just like a fair value gap. So what is a liquidity gap? A liquidity gap is when you have price that you see the wicks crossing, but the bodies don't touch each other. So you have that thing that looks like a gap, but there's actually, it's just the wicks that are crossing, but the bodies are not touching in each other, right? So it looks like it's very similar to a fair value gap and works in a very similar fashion, right? So I like to, I'll draw this as well as my draw on liquidity. So these are the places I'm looking for price to come to. Listen guys, when price hits your targets for the week, all right, price hits your targets for the week, like for example in this week, I'll not be expecting price to go and extend above this fair value gap. No, I'm expecting price to take out the weekly buy side here, take out this particular one, and possibly come to the middle end. I highly doubt that price is going to go all the way to the top of it. I highly doubt it. So those are my three draws on liquidity. And once price hits this one, I will have less confidence to hold for the middle one. Once it hits this, I have confidence to hold for this, but less confidence to hold for this because these two are very close. And one of the signatures you always find in prices, whenever price takes out a buy side liquidity and there's a fair value gap resting right above it, price would most likely go and touch the low end of that fair value gap. It happens pretty often. You can back test this and check it out. It happens pretty often when you have two points of interest aligned and very close to each other. Most of the time you see price take out both of them at the same time. So these are the two my eyes are really looking at on GBP USD. Let me just put my eye there. So these are the two my eyes are really looking at on GBP USD. And once it does that, I'll be looking to see how market is reacting, but I will most likely reduce my risk even heading towards this. But once price hits that, I'm no longer interested in trading for the rest of the week. And that's literally what has been happening to me. For those of you who have been following, I think this week by Tuesday I was done trading. Either Tuesday or Wednesday I was done trading because I'd already hit my target for the week by Tuesday or Wednesday. You know, day trading is not everyday trading. So the fact that you are day trading does not mean you must enter the market every day. All right, so thank you guys so much. And before I go off, I know I said I was going to show you what I look for, my signature I look for in price whenever I want to enter the market. So let me just give you guys a typical example. I'll show it to you on FX Replay because it's much easier to do that there. FX Replay is a backtesting tool. They are not paying for me to sponsor. It's not a paid sponsorship, but I really love the tools that they have for traders. It allows you to do backtesting and allows your backtesting to be very smooth. So that's just something for you guys. You can have a look at it. Nobody's forcing you. Just have a look at it if you want it, and that would be amazing. All right, so I'm gonna show you this on FX Replay very quickly. All right, so say I'm bullish, like for example in this week. All right, say I'm bullish for this week. Here's what I always look at when it comes to the market. All right, so we have the market playing like this, right? I have my 3 kill zones. I have my Asian session kill zone, and you can write this down. My Asian session kill zone is from 9:30 p.m. That's, and all the times I'm giving you are New York time. So 9:30 p.m. New York time to 12 a.m. New York time. My London kill zone is from 2 a.m. New York time to 5 a.m. New York time. All right. Now, what does that mean for me? It means that I am taking trades only within the London kill zone. That's the time I trade. But what then do I need the Asian kill zone for? I use the Asian kill zone for to see a consolidation. Many of the times you see the Asian kill zone have a bit of a consolidation around this yellow period. All right. So how do you get that? Well, you can first draw a line on it if you are beginning, just so that your eyes get used to it. But there are some indicators that make it easier. But you can draw a line. I've given you the time frames, so it's easier for you to just draw a line. Now, once price is coming down here, all I'm looking for is a break in market structure. You see how price is going down? It's making higher highs and higher lows. All right. So what do we call a break in structure? A break in structure is when price is making lower lows and lower highs, and then price breaks its structure. So over here you can see that price makes this low, goes up, makes this low, goes up, makes this low, goes up, makes this low. So once price is making this low, the next thing I'm doing is I'm drawing my break of market structure, or the place at which the lower high in this particular case was formed. I'm drawing where my lower high was formed. Once I draw my lower high, where my lower high was formed, I want to be looking for a fair value gap, either at that particular line or below that line. So I want to look for a fair value gap within the leg that breaks the structure. So let me use my oval tool just to help you guys see it. So this is the leg that breaks the structure from here to here. This is the leg. So I want to be looking for a fair value gap within this time frame, and I'm using this on the 5 minutes, but it also works perfectly on the 15 minutes. It all depends on you. I have done these things and I've tested it both on 5 minutes and 15 minutes. All right. So I'll be looking for a fair value gap within the leg that breaks the structure. So where do I find a fair value gap? Here. It's very, 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 very tiny, but it's there. All right. So that is my fair value gap. And what do? All I do is I put my limit order, right? I just put my limit order over here with my stop loss. This is about a 5 pip stop loss, so you can add stop loss. This is a 5 pip stop loss, so you can add a little bit of a gap for yourself if you want to. All right, because remember, you don't always have to make your stops extremely tight. So you can put a 5 pip stop loss here, and then all you have to do is wait for price to go up and come down into it. You see how price perfectly dips down into it and retraces? That's all you need. Now, where do you take your profits? There are multiple ways to take your profits. You can either hold, looking at structure. You can hold to the next higher high, which is here, or go to an upper higher high, which is here. This is a little more advanced, honestly speaking, because this, for example, when I see something like this, I know price is going to want to draw to this. Why? Because there's a lot of liquidity resting above here. But like I said, this is more advanced. So what you want to do is you might want to hold to the next higher high, right? Or alternatively, an easier way for for entry level, you might want to hold to 1.5, right? Your risk to reward ratio. You might want to hold to 1.5 risk to reward. Take out 50% of your trade. All right, this will give you very, very high win rates. Take out 1.5% of your trade and then wait for 1:3 and take out the rest of your trade, and that's it. And if you look at this trade, from the time that my entry took place, which is here, all right, to where my take profit was hit, which is here, it was literally 1 hour, guys. It was 1 hour. 1 hour. If you are even using 1.5 and using 3 hour, if you're using 1.5 hour using 3 hour, at the same time. That should give you about a 2.25 risk to reward. What does that mean for you? It means if you're risking $1,000 per trade, you just made $2,250 in 1 hour. $100 per trade means you just made $225 in 1 hour. So guys, it's that simple. This is my entry. I've not hidden anything from you. Go back test it, check it out, look at it, trade with it, enjoy yourself with it. I'm giving you all of these things for free, man. So enjoy it and have a lovely rest of your week. Thank you guys so much for joining today's class. Love you. Stay sharp and stay safe in the markets.